Good evening, welcome everyone. My name is Adam Harris and I'm going to be having a look at the global indices. I'm going to start off here with the Dow. So the Dow is encountering some nice little resistance up against 31,000. It started a retracement. What I'm going to be looking for the next couple of days is a nice little bullish candle to form in here and a break of the high, that potentially some kind of long opportunity here. I think that 31,000 could potentially offer some difficulty there for price to pass through. And so if that is the case and it fails to get through that, then it makes sense that the market will ultimately head down towards 30,000. It's not that overextended on the weekly. I really like the look of it there. It is a little bit overextended on the monthly, and so that's just a possible explanation as to why it might do a deeper correction, but certainly looking for a bullish candle the next one or two candles, which would be Monday or Tuesday this week, for potential buying opportunity. But I can see buy prices reaction at 31,000. That is going to be a bit of a tough one for price to get through. Then having a look here on the S&P. S&P also doing a retracement. Again, also going to provide some bullish opportunities. So there might be some shorter term, even for intraday traders, nice shorter term buying opportunities, but not a lot of room ready to work on those. Again, they're weekly not really that overextended, and the monthly definitely in comparison to previous cycles almost certainly quite overextended. So I guess what I should say is that the possibility exists that what could happen over the next couple of weeks is going to be a deeper correction, certainly either on a weekly basis or a monthly basis. Looking here at the Nasdaq, which has done a slightly lower high, it's already back into the moving averages. It generally is one of the most bullish ones, but there is this continuing bearish divergence on both of the indicators, just implying again price action is itself exhausted. If you look, really nice big move, nice healthy correction, smaller move, consolidation, small move, deeper correction, another attempt to push up and immediately a correction. So collectively the market is not able to keep pushing as much in the last couple of weeks as it was prior to that, and so looking more and more likely, as though, especially given last week's bullish candle, that it's actually going to do a slightly deeper correction. If that is the case, then I'd be looking for price to head down towards 12.3, 12.4, and down towards 12,000 for now. The Nasdaq actually not that far away from the moving averages. Slowly but surely, because of this consolidation, the moving average has been catching up, and where I was originally expecting the market to correct down towards 10,000, I'd be happy with it even correcting down towards 12 or 11,000, and that could actually be something that's potentially going to be triggered this week. Even though the market itself is going to set up with a bullish candle, it might actually fail to continue on upwards. So while I'm busy doing the analysis now, I'm realizing that there is some risk in the markets with this, although in isolation, as I said, the weekly and the daily look fantastic. Then having a look at the Russell 2000, which has just been a beast of a performer. Again, a nice little retracement back down into the moving averages this week. Again, could provide a nice little buy opportunity. That monthly is obviously ridiculously overextended, as is the weekly. And so this week might be as good as any to actually have that deeper correction. But certainly initially what I'll be looking for, plan A, is to look for price to pull back into the moving averages and then look for buying opportunities. Moving across away from the US and heading east, starting in the UK. Again, prices already pulled back. A little bit of a bullish candle, which was not triggered. Price coming down perhaps to test at 6550. The monthly is not looking as bad outside of the US, but it doesn't really matter. If the US is going to have a strong correction, it's going to take everyone down with them. So that could be something that happens. So again, plan A for me is going to be looking for a bullish candle that sets up that might be a buying opportunity. But if the market does then decide to either not trigger that or trigger and produce a bearish outside candle and do a deeper correction, then I'm going to be seeing that as more of a monthly correction that's potentially coming into play, and looking at those levels further down. Look at the DAX as well, same thing again, very similar, very close to potentially breaking this previous low. If that's the case, that's just going to see that weekly candle come back down towards that 13,225 level. What I'd really like to see happen with the DAX here is to see price actually come back and test this level, which has been strong resistance for a while, test that as support, and ideally find some support there. So that would be great for the optimism for the rest of Q1. Having a look now at the French CAC as well, similar type of idea. There's been some potential support here. I'd like to see it ideally find support there and stay above that level if possible. Euro stocks as well, bumping its head up against resistance here. So a correction here down 400 makes a lot of sense really, but also I'd love to see that ultimately by the end of the week or next week find its way back over that level, if that is a possibility. The US indices are actually going to have a very interesting impact on that. Next we can see here the Nikkei as well. That's had a fantastic little breakout of this 24,000 level all the way up, but at some point that is going to have a bit of a correction, even if it isn't all the way back to test that level. But coming back down in towards the moving averages would be really nice to see that happen. And again, even on the price on the daily, it's now starting to head towards overextended. So initially, again, that first approach being, that first plan A being looking for initial retracements and then looking to see if price can continue onwards from there. The S&P and the ASX out of Australia is struggling to break through that 6,700 level on the weekly. But nice little bullish candle last week. It's not actually impossible. It's consolidated that it could continue to push a little bit higher. So really just in summary, looking at these US markets, the US markets seem a little bit more vulnerable than everyone else in terms of that possibility for a deeper correction. But the dailies, as I said, the dailies look nice and bullish in isolation. If the monthlies weren't overextended, it would be a very confident kind of buying opportunity for me. Look here at Tesla, which is also very overextended, where its true value lies kind of closer to 400 level. That hasn't really shown a lot of signs of weakness here. We've got a potential bearish inside indecision candle, and so therefore price could find a bit of a correction down towards 600. And so that's something I'll be looking for in terms of that as well, if that is going to be the case, if we're going to get that deeper correction. Then here, look at Apple. You can see Apple now struggling, certainly with that 140 to kind of 130 level there, starting to produce a little bit more bearish candle, inside candle as well. And also here on that weekly, starting to do a bit of a retracement. So I'm looking to see Apple head down to 120. If it falls to 120, then it's going to head down towards that kind of 100 level, which is probably a more accurate representation of where its true value lies for now. And then it can let off some steam. So if that's the case, then the markets can let off some steam and they can recover, and then kind of by sort of towards the back end of summer, we'll be back into a nice little bullish run again, which is in time for the second half of the year. So it's really not the end of the world if it is the case. The market does need to let some of that pressure off. The question is that actually going to be the case this week? So again, as I said, the daily in isolation looks good. That's not really a problem. The problem comes for me that we've got a bit of bearish divergence that's showing in on the NASDAQ, which is something that is not always the case. We're failing in terms of price action to do really nice big moves up. We've produced a little bit of a lower high, and therefore I would expect a correction down towards that 12,000 level makes the most sense. And if that is the case, it might as well then potentially consider doing a longer term correction. So that is where my kind of plan A and plan B is. I'm leaning on, at this point, I'm leaning towards really including that possibility of a deeper correction. So I will be cautious. I will be probably reducing exposure and taking it from there. Thank you. Have a good week.